Welcome to the Simplified Dentistry podcast. Join us as we discuss clinical, operational, and financial aspects of your practice, help you enjoy life, and dare to simplify dentistry.
Hello, and welcome back to the Simplified Dentistry podcast. I'm Mortaza Shakan, along with Dr. Rick Offit. Today, we're happy to have Holden Sours join the podcast. Holden, a graduate of Clemson University, is a dental-focused CPA with over 15 years of professional experience working with high-net-worth individuals and small business owners. Holden, thank you so much for joining us.
Thank you guys for having me.
Nice to meet you, Holden.
Taxes.
It's all good.
Yes.
You as well.
What did you say, death and taxes?
Yeah.
We can't start there, right? That's no good.
Skull and crossbones with all this.
That's right. That's right.
Good way to start the talk, right?
Exactly. So, right now it's, towards the end of the year, so simple things that, all dentists and everybody dealing with their taxes and small businesses are thinking of as year-end planning. Any big tips, any changes that you see moving forward, stuff that
good question.
People should think about?
Yeah, so one of the things we say is this is the perfect time of year to start reviewing those things because you can't do much come April. You've got a big number. It's tough to do anything. Kind of like what you see with a dental practice. If someone comes in with a lot of work, well, you can help them, but it would have been a lot better if they came in 6 months ago.
Sure.
So, same thing here. The first thing we talk about is just the boring stuff. The routine things you're going to do every year. Maybe not the things you're going to tell somebody about at a dinner party. Say, hey, look what my accountant did. Hey, look what's going on here. It's just the things you're going to do consistently. So that's making sure any expenses that might be business related, you're really paying for it through the business account, not running through a personal account. Those are things like your home internet, your cell phone. You need all those to run a business. Maybe not practice dentistry, but run a business.
Right.
So consistently, those kind of things are important. But I'd love to hear from you guys. What are things you've heard people talk about before that kind of struck a nerve? Like, does that really make sense?
Well, the consistency thing, I think, is what dentists tend to struggle with, is to consistently provide their accountant the information they need in a timely manner, right? I mean,
Holden knows firsthand about lack of a timely manner.
I practiced for 40 years, and I don't think I was ever consistently on time.
Yeah.
To
Holden
deliver
writes
stuff.
the nicest emails to me when I'm like,
Does she use emojis and stuff?
No emojis.
Oh,
we're
okay,
not
good,
quite to that
good,
level
good,
of
good.
friendship yet.
No.
But,
Maybe soon. Maybe after this.
Yeah, but it's definitely like, Holden, I'm so sorry I'm late with this. It's okay.
Exactly.
Lots of other people have done this too.
Yeah. But I'd say that is probably one of the most important things you can do is just kind of stay on top of it because there's no way to really plan if you don't know what you're planning for.
So let's think about that quarter on quarter as you build the year, right?
Yeah.
So and I know we're in the fourth quarter, and when we're recording this, but for our folks that are listening, it's the first quarter has as much impact as the fourth quarter, right?
Exactly.
In terms of dollars.
Exactly.
So what do you want from folks in that, so you can build the year and be able to predict
that's a good question.
where it's going.
So I would even back it up further. I'd say this time of year is when we're really projecting out first, second quarter, kind of anticipating what's going on so you can make those tax decisions along the way. Because when you're in them, it's kind of almost too late. So really sitting down now, figuring out, okay, what really happened this year? Well, what do we think is going to happen the beginning of next year? That's an important thing to do because what we're trying to do is manage your deductions. Are your deductions more valuable this year or are they more valuable next year? And one way you can determine that is by what your income's going to be. Because if you're in a higher tax bracket next year, those deductions are going to be more valuable next year. It's going to offset income tax at a higher rate. So by kind of projecting out where we think next year is going to be, we can make a lot of important decisions now.
So you have to look at a couple of buckets, right? You have to look at the practice bucket.
Yep.
And then you have to also look at any other buckets that the dentist has going on, like we taled about. Dentists are notoriously good, really quite
doing
good
something else.
at
Look
doing
at you guys.
at doing
Look at what you're doing right now.
doing something else. So you have to look at all the buckets, I guess.
And then bringing in if your spouse is working, bringing in their stuff. So
exactly. So that's another bucket, right?
Exactly.
Yeah. Exactly.
Too many buckets and too many hats sometimes.
Yeah.
Very much so. So I'd say one of the most important new things we're seeing in the tax world is what's called the pass-through entity tax. This wasn't something that was in place 2 or 3 years ago. North Carolina just passed it 2 years ago. And it's a new way to pay your state taxes. So you can pay it through your practice, get a write-off for it, as opposed to paying it personally. A lot of states have been doing that, especially here in North Carolina. It's valuable because of tax legislative changes. You can no longer write it off as an itemized deduction. You're capped at $10,000. Most dentists are paying more than $10,000 in state taxes.
Would that apply to S corps as well as C
S
corps?
corporations in particular.
Does it have any application to C corps?
Not as much C corporations, just because they're taxed differently, but it would be any flow-through entity would be applicable to that. So it's extra steps. It's another reason to kind of stay on top of where your income's going, but it's valuable because you're taking something you're paying anyway and making it a deduction. That's our favorite thing to see.
That's awesome.
That's one of my favorite things too.
Exactly. You're going to pay for it.
I don't do CPA lingo very often, but deductions are good.
Deductions, I can
it's
understand.
important.
Deductions, I understand.
So let's change this and say so. Dr. Chacon comes in to see you as a new client.
Yep.
He walks in, he's a dentist, so he's a small business owner. And walk me through, I know it's an elaborate process, but kind of walk our listener through what are the big questions you ask him?
Yeah, good question. My first question is always, tell me what tax strategies you're implementing. Just get a base knowledge. Some people say, I have no idea what I'm doing. Other people are a little more sophisticated. They know what they're doing. They're kind of playing the game. Kind of want to get a game plan of where you are. My second question is, okay, what do you think the next 5 years look like? Are you trying to grow? Do you want to go into the DSO space? Are you going to buy a building? Where are we going in the long term? Because that's really going to help us decide how we're going to utilize all these deductions you have available. Because a lot of times it's a timing thing. So the next thing we do is kind of look through the returns and see if what we see on the paper really is matching what you're saying. Because, there can be disconnects between a taxpayer and a CPA. We want to make sure that everything that happened in the past is what we expected it to be.
Or what we thought.
What we thought.
What we thought was going down. Right?
Yeah,
Exactly. The next thing we do is just make sure a lot of the common tax strategies you're employing, those can be things like home office expenses, making sure your children or your spouse are on the payroll if that's applicable, making sure you're in the right retirement plan, making sure you're in the right entity structure. And the only way we can really know the answers to those questions is if we know where you think you're going to be in the next 5 years.
So planning.
Planning. Yep.
And more on a 5-year scale than
just
necessarily
right now.
the 1 year. Yeah.
Exactly.
Okay. Nice.
Yep.
You kind of touched on retirement planning.
Yes.
I know this is something you and I have talked about, personally a bunch.
Yeah.
So with that, what strategies do you look at helping your clients with as far as, do you have them looking at simple plans? Do you look at 401ks,
question.
other options for them?
Exactly. So we usually start by asking, okay, how much money do you personally want to set aside for retirement? If you say it's close to $20,000, you think you can defer into a plan, it's a really good way to start out with a 401k.
Right out of the box.
Right out of the box.
As soon as you can spare the money,
feel
you
like
do
you
it.
can put that money aside, that's the best thing you can do. Your staff are going to be happy.
Start early with a plan, right?
Yep,
Yeah.
exactly. If you don't think you're going to be able to kind of meet that contribution level for a while, we can look at things like a simple plan. That used to be a lot more exciting, I guess, because the fees to have a simple plan were significantly less than administering a 401k plan. That's not necessarily the case anymore. There's a lot of low-cost provider 401k plans out there that kind of eliminate that need. So we say, if that's the case, you might as well just start out with a 401k plan. The price is the same. That way you have the option to contribute more if you have a great year and you have extra funds available. 401k plan you can also grow with. You can add on a cash balance plan, a defined benefit plan. Those are ways to funnel a whole lot of money into retirement. Some of it makes sense early in your career, but a lot of times those bigger plans make a lot more sense when you're closer to
on
retirement.
that back end,
Yep.
Can you tell our listeners the difference between a defined benefit plan and a cash balance plan?
Yeah, it all depends on how the funds are calculated, whether it's a defined contribution that you're going to get, a defined benefit that you're giving your staff, or if it's extra funds you're putting into a plan. We don't see as many of those as much anymore as we see cash balance plans. They just allow for additional funding.
And so do you take your folks that direction when you're coaching them?
Usually, yep. A lot of times we'll defer to the TPA who actually runs the calculations, because what they'll do is they'll look at the ages, wages, and makeup of your staff. And usually if there's a really wide discrepancy between the doctor who's receiving a large wage, who might be a little bit older, versus a new staff not making a lot, very young, well, the amount of money you're putting into the plan gets a lot more heavily allocated to the retiring doctor, just because they're so close to retiring. So I'd say an important thing to look at is finding a TPA, so the person who administers the plan who's dental specific, because the makeup of a dental practice is a lot different than a makeup of other businesses.
So, I mean, along those lines, we've talked about retirement already. Kind of back towards other stuff with the individual practices, as far as inflation and fee increases, to kind of switch gears. What do you see this year versus last year? What are you advising your clients on?
So a lot of times this is an annual discussion, but we're encouraging people to do it twice a year, if not 3 times a year, because with the rate of inflation, if we're waiting a whole year, there's a lot of time we could have raised it earlier and kind of been on the front edge of that. One of the things we say to look at is how are your supplies increasing, and kind of drive it in that regard. But we are seeing a lot of fee increases.
Kind of look at the variable expenses that are that you're paying every month or every year, and see.
Yep, and you kind of want to pass that on.
That
more
will
or less.
scare a lot of doctors right now.
It will.
Because
it will.
I mean, between supplies and then you start talking about
what your staff want.
staff
wages, the increases we've seen in that over the last couple
of
years.
Holden, kind of give us some metrics on that. Where should those numbers be post or in this inflationary period? What percentages are I know this kind of dumbs the subject down,
not
but
at all.
maybe it gives us a takeaway that we go, okay, hey, if we're at 38%, we're too high. If we're at 28%, we're probably not going to retain employees. And there is a balancing act.
There is very much a balancing act. That's a good point you bring that up. One of the things that we find helpful, we recommend to a lot of our clients, is building a dental-specific chart of accounts in your QuickBooks file. So that means when we're talking about benchmarking percentages, you can easily see what the benchmark is, and you can see what you're doing. So it's just changing the order of that chart of accounts so you can have knowledge of what you're doing. You don't have to wait for a consultant to come in and look at this and tell you. You can see it for any time period you want. But to your point, usually we see staff wages 30% of collections. That is increasing and increasing. A lot of it depends on what industry you're in as well, what specialty. That can change it. Supplies are just increasing. A lot of times we base this on historical averages, and I don't necessarily think that's where we are now. They're just increasing so substantially, but it's usually around 15% of collections is where we see lab bills and supplies in total.
In total.
Yeah.
Okay.
If you're doing Invisalign, you're going to be on the higher side of that than if you're not.
And then are you seeing differences with general dentists that are milling crowns in office versus the guys that are not?
Exactly. Anytime it's a lab provider, you are seeing that closer to the upside of that benchmark.
And then little tips and tricks, I guess. Are you seeing clinicians still using kind of the in-house lab write-off and deductions?
We are seeing some of those. Yep. Not as much as we used to, but some of that.
Explain that a little bit.
So it's something Holden and I briefly talked about. There's a time when if you're a CEREC doctor, or I guess CEREC's not just the only in-house milling products, you could deduct basically, and Holden would speak better on this than I could.
You could previously deduct a portion of what you were doing as an additional credit.
As a laboratory expense.
Yeah,
exactly.
Exactly.
Even though it's an in-house event.
Yeah.
Okay. So that would include space and equipment?
Yep.
And employee cost in there? Yeah.
Exactly. That kind of brings up another topic that I've heard a lot of my clients ask about lately is research and development credits, R&D credits. I think there's a lot of third parties out there that have kind of honed in on the dental industry and have said, hey, we can get you a credit for research and development. When we've actually run the numbers there, very few practices actually qualify. And it's basically saying more in the orthodontic space, if you're manufacturing things like that, you could take a deduction for it, another tax credit. There are third parties out there. They usually do cost segregation studies and research and development credits. And I've seen a lot of clients say, hey, I really want to see if I qualify, spend a lot of money for a study, and then it turns out they don't qualify. So anybody out there who's been marketed to, heard something like that, I'd run it by your CPA before you kind of dive in and see what the numbers look like.
So is that more orthodontists that are, fabricating aligners in office and things like that?
Yep.
Oh, okay.
Yeah.
So would that be the 3D printing as well? So
Exactly.
if you're printing surgical guides, for example, and you have a designated space for that.
Yep, and it doesn't really fall within the letter of what the tax credit is for. The tax credit is really for research and development to do something new and improved in a different way.
So what I'm talking about would probably go back and become under your lab, the lab deduction.
It's just too common in the eyes of the IRS to really qualify.
So are they having to publish results or do anything to back up that they're actually doing research and development?
It's a calculation. These third parties come in and kind of fudge the rules to see what qualifies.
That's a very highly technical CPA term.
That's one of our favorites.
I used to use the thing of wing it, and my CPA hated that expression. He'd look at me and go, Rick, we don't wing it. We don't wing it.
Very much so.
Yeah, but black, white, and then there's that gray.
Yep.
Yeah, my pants right now. Nice.
Yep. Well, the IRS, they have some hard and steady rules. A lot of times there's some gray areas. You talk about like W-2 compensation for an S corporation. Has to be reasonable in terms of the IRS. Well, what is reasonable? You kind of have to walk that line and figure out what makes
can
sense.
be a good vague term.
Yeah, but most of the time they're pretty hard and fast.
Yeah. I always would use the thing, Holden, that if you're sitting down there with a couple of your friends and you're telling them a tax strategy and they look at you and go, I don't think that'll fly. It's definitely not going to fly with the IRS.
That might be a
good
tip
you're talking with some of your friends, and if they go, man, you could go to jail for that, you probably shouldn't try it, right?
Right, exactly. That's what I always say. Think about sitting across from an IRS agent, and are they going to agree with you? That's kind of a good litmus test. You never know what agent you're going to get. You can get someone who's kind of, like
but
we're sitting down talking, but most of them are pretty.
Yeah, I doubt many of them use the term, Doc, it looks like you were winging it.
Oh, no.
I can see what you're trying to figure out.
I see what you were trying to do here, Doc, but that's winging it.
Yep, very much so.
Along those lines, how often as a solo practitioner or group practitioner can you expect to have the state or the federal government kind of want to peek at your books?
Yeah.
Is there a hard and fast rule on that, or is it?
That's a very good question. I get asked that a lot. So I would just say there's a difference between a federal and a state audit, as opposed to the county wanting to see your business personal property tax return or sales and use tax return. Those are just kind of automatic things you're probably going to see every 7-8 years. A full-blown IRS or state audit, you likely won't see in your career. I was in a course just last week, and they said only 5,000 S corporations were audited last year. Well, if you think
nationwide,
okay.
So your chances are pretty slim, especially when you think of an S corporation in the dental sense. Usually have 1 or 2 shareholders. Well, an S corporation can have up to 40 some odd shareholders. The amount of income in that business is a lot more than one shareholder in a dental practice. So when the IRS is kind of looking at everything they could audit, they're going to go after the ones making more money. It's just more lucrative to them than it is to you. So there has to be a whole lot of red flags. A whole lot of things have to go wrong before you get into this audit bucket.
Well, that's good to know.
Yeah,
exactly.
That's good to know,
especially if you're winging it. So
exactly.
that works out great.
That's right. So So I guess the addition of 80,000 new IRS agents are not going to disproportionately affect the dental practice
Probably
world,
not.
I guess.
A large percentage of IRS agents are retirement age, so we think a large portion
So you
is
think
just
that'll be
going to
kind of a net
offset
zero
that.
thing?
Yeah, maybe a little bit better, but it's not as scary as it sounds.
Good.
So let me ask something, and this is by no means a political question, but what do you see?
Famous last words.
What do you see? What do you see with the change in the guard at the national level, with the effort to reduce taxation, encourage small business growth, and so forth? With that coming in, do you see any changes that dentists should be watching for, or should they is it a wait and see? Wait and see, at mid-year, end of the first quarter, second quarter, try to figure out what's happening.
Yeah, unfortunately, our stance is it kind of is wait and see, because so much can happen from what we see now to what actually happens to how the IRS interprets it. That can kind of run the spectrum of what we'll actually see when the time comes. So unfortunately, it's nothing we can do right now, but I would say after second quarter or third quarter next year, there's definitely some changes we could probably tweak.
Is there anything from like the previous 4 years, or I guess?
Well, we know that the lower tax rates are going to be extended.
Exactly.
We do know that.
Yep.
Yeah.
Which would have been quite different had things gone the other way here in November.
Yeah. So I think we are all very excited to see what happens, just in terms of what possibly could happen.
Yeah. Anybody that tells you they know what's going to happen is
they're winging it.
They're winging
it.
We do a lot of year-end planning conversations this time of year, and 99% of the time it turns into a political conversation.
I don't think mine was political. I was just stating. I was just stating kind of what I heard.
Yeah.
But anyway, that's good advice, Holden. Thank you.
Yeah. Our ideological differences are not on this podcast.
Right.
One thing I was thinking about that I wanted to run by you too, with the amount of practices you deal with on a personal level, have you seen more practices and more providers going in or out of network with insurance companies because of lowered benefits? Like, I had a patient come in the other day and they're like, "Doc, I'm out of network with insurances." But he's like, "Doc, my insurance plan's changing. They've lowered the max that they'll pay. They lowered how much they're going to pay for each visit, and they've increased how much I have to pay for each visit." He's like, "What can you do for me?" I was like, "Well,"
and what did you say?
It's like, "Well, let me look at this. And, we've been out of network for 70 years. We have no plans to go in network, fortunately, unfortunately, for the patient sometimes. But I think the quality of care that we provide, sets us apart for that.
Right.
I had a mentor in dental school who ran a great, successful practice in Raleigh, and she asked her the same question one time, and she was like, "Look, if you're searching for the lowest price dentistry, I'm never gonna be your dentist. There's always going to be somebody that can beat me on price. But if you're searching for quality, I challenge you to find anyone whose quality of dentistry is better." And so that stuck with me.
Exactly.
I mean, it's stuck with me for 20 years now.
Yeah, we've seen everyone kind of reevaluate what's going on, and that's something I usually suggest. When we see just the bottom line getting squeezed, because if you're dealing with insurance, even if you increase your fees, you aren't really realizing that.
Right.
So the only option is to try to go back, renegotiate, see whatever you can do to improve that. And sometimes it does mean kind of dropping.
I mean, you're increasing your fees many times just increases your write-off.
Right.
Yeah, exactly.
Right.
So
you kind of have to go to the root of what's going on.
It may help you on the percentage of your patients that are fee-for-service.
Yeah.
But if you're 100% all in networks, all you do is
just to write
write off a bigger number. So you can charge $10,000 a crown, but you're still only going to get reimbursed $850, right? So your write off just changes.
So you kind of have to go back to the source and try to renegotiate it.
Yeah, I had a younger colleague the other day text me. He was like, "So I got paid $632 for this crown." I was like, "What should I do?" I was like, "You should get a different practice to work in."
Yeah.
In 2.5 hours of his day, $632.
Right, and that's you have to look at those numbers. Otherwise, you aren't going to know.
I used to do an exercise on this where we were talking about controlling prices, and I was speaking at a national meeting, and we were talking about the need to control expenses, and then particularly we're talking about laboratories, dental supplies, whatever other expenses you want to put in there, and I ran through the exercise of the fact of what does it cost dentist A, who's a fee-for-service dentist, what does it cost him to deliver a crown on a lower first molar, and what does it cost a DSO to deliver it just by virtue of the negotiated pricing that the DSO has done with all of their vendors and suppliers. And it was shocking how few folks, now this was a couple of years ago, how few folks could really realized what that difference is.
Yeah, I feel like when you put numbers to
exactly,
it.
Exactly. The cost for a fee-for-service dentist their cost in the crown is almost equal to what the DSO is charging to deliver the crown.
Exactly.
Right.
Yeah, Frank Spear, I've been to a bunch of his lectures and the seminars and workshops that they have at Spear. And one of the first ones I went to with him, he talked about that. I mean, obviously, if you're Frank Spear, you can charge whatever you want to do anything. But he broke it down with the numbers, and I think as dentists, sometimes we wing it on fees, and you kind of have an idea of what the cost is, and you kind of understand what it's costing you to do this procedure, but it's still in that gray area of you're not exactly sure, well, I think this is kind of a right number to give me enough money for what I did to cover everything. But he broke it down, fee-for-service versus in-network, and he did round numbers, and it was, call it $1,000 a crown back then. And he broke it down. He was like, this dentist did 5 crowns in office, fee for service. He got, $5,000. The other guy did it in network. He got $3,200. He's like, you keep on running that number, it's a losing proposition for the in-network guy.
Yeah.
Unless you can increase something and lower overall costs. If you're in a big group, like if you're in a large DSO that has the resources to do it, then, your overall cost can go down. But it's interesting.
Yeah,
interesting time to be a dentist.
Not harder, right?
So what would we say, Holden? One of the things that I always ask all of our guests when I'm fortunate enough to be one of the co-hosts with one of the brothers, Shakan. What would be the things that you would tell our listeners to really focus on right now?
Oh, good question. Right now, as we go into year end, I would say making sure that you're kind of employing all those ordinary tax strategies. They aren't exciting. They aren't like the most fun, but you're going to consistently lower your tax bill that way. So things like putting your kids on the payroll. Have you paid them the maximum amount this year that you can? Have you funded your 401k to the maximum amount? A lot of times people they'll get close. They'll leave a few $100s on the table. Well, if you do that consistently over and over, you're losing a lot more. So just making sure you're staying on top of all the year-end thresholds. If you are using your home for business functions, just reimbursing yourself for this. This is called the Augusta Rule. I think it's
such a great name.
It's for anyone who hasn't heard of it, you're allowed to use your home for business functions up to 14 days a year, come up with a rental value for it. Well, you're deducting it as an expense to your business, lowering your tax bill, but you aren't reporting it as income on the personal side. If you're hosting parties there, anything along those lines, that's a good thing to do. Like I said, something you're doing anyway, you might as well take the deduction for it.
Sure.
So just making sure you're doing that as many times as possible.
On the child
labor
laws, yeah.
Yep.
So what age are you encouraging clients to start employing their children?
Good question. It's state by state because it does go back to those child labor laws, but usually around 6 or 7, you can go ahead and put them on the payroll.
Nice.
This year, you could pay them up to $14,600 a year without them having to file a return or pay any taxes. That's good because it's taking money out of your higher tax bracket, putting it into theirs, which is 0. So a good way to kind of funnel deductions down. With that being said, it needs to be, in the eyes of the IRS, reasonable compensation,
Right.
is that amount reasonable for a 6-year-old? Well, I don't know. You might have the best 6-year-old out there, but I don't know. That's not a call I will make.
That reminds me of, my kids are old, and I'm older, and my kids are old. But the thing is that I put them to work when they were so little, and back then you had to stuff the statements in the envelope, and my kids did all the labels and the stamps and all that stuff, and they were so young. Stamps were on the wrong corners; they were upside down. Patients would walk in with a statement and go, "Doc, did you do this?" Stamps in the wrong corner for the whole thing, and so that is my kids remember doing statements on the floor of the playroom. That's how child labor laws that we did in our house.
My kids have it too easy. I need to get back into that game a little bit more.
Right. Make them work for it.
Yeah, get a paper cut here and there.
That's right.
Teach them how to be tough. So as far as the 14,600, where are you seeing clients push that? Are you having them put it into retirement vehicles for their kids? Or are you seeing them putting into educational funds?
Usually a mix of things. Our first recommendation is to put it in a Roth IRA because you need earned income, like from a W-2, to be able to do that. Any additional funds you can put towards retirement, 529 or a Coverdale savings account, anything like that is helpful. We kind of like the Roth IRA because they can use it for education, but if they get a scholarship, they don't need it. Well, it's not like the money is stuck in an educational vehicle. They can use it for retirement when the time comes, that kind of thing. So
that makes a lot of sense, Holden. That's a great strategy that I know you're making kind of light of it, but I think that's a huge thing is that you can use the Roth for education.
Yeah.
Whereas if you put it into an educational vehicle,
that's what it's going to be used for, right? Yeah. So you're kind of moving it between kids, seeing what happens, and you just can't make that decision when the kids are 6, 7, 8, 9 years old.
When they're becoming elite athletes, and you can tell it's 6.
Right, they're going to have scholarship. Don't worry about them.
Don't need the 529.
Yeah,
that's right. So what do I do with that? Right.
Yeah. Exactly.
How about this? Holden, where do you feel that the health savings accounts fit into to dentist strategies? I was a big advocate of that and just never used it, and I was shocked when I finally looked at it. The amount of money that just grew there. I mean, how do you talk to me a little bit about your feelings on HSAs?
Yeah, we love HSAs. If you have a high deductible plan, you can get one that has an HSA available with it. Funding it and letting it kind of grow like a retirement account. It's going to grow and grow and grow. You don't have to reimburse yourself from it every year. I think that's kind of one of the misnomers about it. It's better to leave the money in there and then reimburse yourself down the road. When you are in retirement age for that, because just think of how much it potentially could have grown by then.
I'm glad to hear you say that. I mean, it was one of these things where we funded it forever, put it in the S&P 500, and just let it rip, and it ripped along for a long time.
Yep.
And it was stunning the outcome. Now,
and you're getting a deduction for it every year, which is even better.
That's exactly right. Maybe the misnomer is, and I believe that in some corporate sponsored like HSAs, you use it or you lose it. Is that correct?
That may be where
that misnomer comes from. That dentists
I
hear
would agree
and
with
understand.
that. Things like an FSA,
that's
a
right.
bigger employer,
HSAs,
it is kind of like a use it
acronym.
or lose it thing, and I think that makes a lot of people nervous. But an HSA, no, I would just consider it another retirement vehicle.
Yeah,
and
that's
then
great.
Are there changes in the amount you can contribute to that
Yep,
for this
every
year?
year it gets indexed.
Goes up like $500 a year or something. It's almost $8,000 a year now.
Is it now?
Yep.
That's great to know. And the FSA versus HSA.
But
it's still. I was right there with you.
Yeah,
that
I
trips
used
me up
the
all
wrong
the time.
acronym on that. I'm sorry.
I keep on talking to Holden about 501c3 plans, and she was like, "You mean a 529 plan?"
Yeah, that's what I meant. I meant that too.
Yeah.
Well,
yeah.
everyone always says the same thing, you know. Everyone's making the same mistakes in the same way.
That's right. As long as we're all on the same page.
Yeah,
Right,
exactly.
right.
Yeah, she knows how to translate the dumb dentist. There we go. Well, Holden, thank you so much for being with us.
I appreciate it.
It's great to have you here. If there's any other closing tips or any big picture items you'd like to share with our audience, that'd be great.
Yeah, good question. So I'll leave you with this: vehicle deductions.
Mm-hmm.
Those are rather large this year, that we might not see them as large next year. So if you need to replace a vehicle, I'd probably think about doing it this year versus next year.
Oh, wow. Okay.
That's a great take home.
Yep.
Yeah.
Yep.
Because we always say at the end of our podcast,
Yeah.
what can we tell our listeners that they can go home tomorrow
Yeah.
and be better off as a result of
That's
it?
Exactly.
awesome.
So if you think you're
buy a
buying
new
one-
car, right? That's
Yeah.
So
awesome.
does that include like the midlife crisis buying the Porsche?
Maybe not that one. That kind of gets limited. But
Yeah,
if you think you're going to buy it next year anyway, you might as well get it now.
So what you're
Interesting.
saying, Holden, is that a new boat doesn't qualify.
Maybe
No,
not.
not
I
the
think
boat.
an agent might kind of look at you a little crazy with
All
that
right,
one.
thank
But
you. Good advice.
are you going to put your logo on it? Are you
Yeah,
going to take
yeah.
everyone out on
That's
it?
right.
Then maybe
There we
we'll
go.
talk.
We can do all that stuff too. That'd be great.
Yeah, maybe for the podcast. Maybe not your dental practice. But
Holden, so very nice to meet you. I appreciate you
Yeah,
coming on
you
and
guys
doing
too. I appreciate
Simplify
it.
Dentistry with us.
Yeah. Thanks again, Holden.
Yeah, thank you guys.
All right.